How to be a bad investor. What is going on, guys? And that is what we're going to be talking about here in this video today. It's Monday and I'm actually really excited because I get to go back to posting videos like these. Hope you guys are going to enjoy this video and get some value out of it. But a lot of times when you see investors, maybe you see them watch one video and they get a little bit lucky. Maybe they watch one of my videos, they watch one of Graham Stephan's videos, maybe financial educations, and they think they're the next Warren Buffett because maybe they just got a little bit lucky. And they think they can't do anything wrong at all. But here's the thing, guys, you can do a lot of things wrong in the stock market. Even if you do have the experience and you do feel like you're a very seasoned investor, you can still make mistakes, be a very bad investor, but that's okay because we're going to talk about those things in this video here today. Hope you guys really enjoy this video. I hope you guys get some value out of it. It did take me a while to make. I really did sit down and think about really, like, not common mistakes investors make, but more so just mistakes that make investors bad, and where I can look at someone and say, yeah, maybe I shouldn't take your advice, or maybe I just should not listen to you. Either one of those things. But like I said, hope you guys enjoy this. If you do, make sure to hit that like button. That really helps me out in a huge, huge way. And don't forget to subscribe to the channel as well if you want to see more videos like these that include the stock market news, personal finance, and really everything in between. Now, guys, keep in mind, in my opinion, it's actually really hard to lose money in the stock market consistently. People lose money in the stock market all the time. Even Warren Buffett will lose money in the stock market. Even, really big investors, very well-known investors, they're going to lose money in the stock market from time to time. But the important thing in here is that if you understand your strategy, if you understand what you're doing, and you understand like the movements of the market and how the stock market works, it's going to be very hard for you to lose money consistently over time. Now, is the stock market for everyone? Probably not. You need to build up to that. But we're going to talk about in this video basically things that investors do that really aren't good. So if you're starting out to be an investor, you're a newer investor, then you can maybe just jump past these things and you can just prepare yourself to be ready for mistakes that you might make in this regard. All right, guys, so the first mistake that bad investors make is not thinking in the long term. Now, when I look at a stock, I look usually 3 to 5 years out or 5 to 10 years out, depending on the industry, depending on the company, depending on a lot of different things. If it's more of an index fund, you could probably look like 30 plus years out because obviously the market will always go up eventually in the long term. Now, the problem with this, say you buy Apple at $120, right? You buy Apple, or like a couple shares of Apple today, you buy some Apple shares today at $120, and let's say tomorrow Apple goes down 5% to $114, right? So all of a sudden, you might be panicking. If you're not thinking long term, you're like, oh my God, like Apple just went down 5%. Do I sell so I don't lose any more money? Do I buy more? Like, you just don't know what to do. You're very indecisive here. Now, say what someone might do who's a bad investor, who does not think of the long term, what they might do is they might say, all right, you know what, Apple's at $114, let me just sell out and I'll buy back at the bottom. Great idea, right? Perfect strategy, right? Wrong. Here's the thing. How do you know, guys, where the bottom is? That's the problem. How do you know the bottom's not $114? How do you know the bottom's not $100? How do you know the bottom's not $50? Boy, I really wish Apple would go down to $50. That would probably be like one of the greatest things that could ever happen if Apple dropped that much to $50. Assuming nothing went wrong with the company, I would definitely be loading up on those shares. But anyway, how do you know where the bottom is? That's the thing, because you really don't. No one knows where the bottom is. It doesn't matter what you're doing. No one truly, truly knows. I don't know. Warren Buffett doesn't know. Graham Stephan doesn't know. Financial education doesn't know. No one actually knows where the bottom is. So now say you're playing this game now where you're trying to get in and out of stocks, you're just like making short-term moves and you're doing stuff like that where like, I'll just sell off right now and I'll get back in a little bit when it's a little bit lower because it's going to dip a little bit lower. You're honestly playing a dangerous game and it's going to be really hard to win that game, guys. Like, this is not Jumanji we're playing here. We're playing to win. We're not playing on luck. We're playing on investing. Investing, not gambling and luck, investing. And so I did this when I first started in the market. My portfolio would go down like $50 like a few years back. I don't know how long it was, but a while ago. And I would just be like, oh my God, I just lost 50 bucks. I got out of the stock. I can't do it. And that was probably because I didn't understand the stock market and I didn't understand the strategies I was using. But now that I do understand the stock market and those strategies, years removed from that period of my life, I can just keep putting more money in the market when I see more deals and the market keeps going down, down, down. And another thing, you don't want to invest money that you're going to need in the short term. So say you have a $5,000 rainy day fund, we'll say 5 or 10,000, whatever number you have. You don't want to just put that into the stock market, because let's say the market dips 30% like it did back in March, and your car breaks down, or maybe you get laid off and you need that money to pay bills, you need that money to get your car fixed. The problem is you don't want to sell your assets that are down 30% right now that are going to make you money in the long term, but you need to pay the bills. So you need to make sure your emergency fund is not the money you're investing with, guys. It's money you're not going to need in the short term, because in the long term, it's going to make you money. But if you need that money in the short term and you have to sell off your assets and some of your investments to pay the bills or use money for whatever you need the money for, honestly, that's just not a game I would want to play, and I really would not want to be put in that situation by any means, because that's very, very stressful. So bottom line, guys, don't think short term, think long term, and most likely good things are going to happen. All right, guys, the second way that you can be a bad investor is by not doing the DD, not doing your research, not putting in the work, all right? So here's the thing. Let's say you watch some random YouTube video from some random guy on the internet who you don't know, and they say that they see some whatever stock and they think it's going to go up 800% and it's easy money and it's an easy game, blah, 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 okay? So what's the problem with that? You don't do any research, you just decide, all right, he knows what he's talking about, he seems confident, like seems like a good guy, like he's been in the market a while, I'll just put some money in this stock, right, and see what happens. So you put all your money, all your capital into that stock, right, so you've got $10,000. You put $10,000 into that stock, and what happens? That stock does not do anything at all, and you end up losing money, okay? That is not good, because you need to develop your own opinions in the stock market. And ultimately, you have to be willing to put in the work, especially if you're picking individual stocks. If you're picking like index funds, that comes from more of stemming from just understanding the strategy that you're using. So understanding the long-term index fund investing strategy, the buy and hold strategy, those type of things. But if you're picking individual companies, guys, you need to be willing to put in work. You need to be willing to read all these documents I talk about all the time. You need to be willing to read the 10Ks, the 10Qs, you gotta listen to conference calls, etc., etc., etc. And if you're not doing that work, guys, and you don't understand the company fully, a lot of problems are gonna come for you, because how are you gonna respond when that stock dips 50%? Are you gonna buy more? Is there something wrong with the company that maybe you should be aware of and you should sell out and cut your losses before it gets worse? How are you going to know when to sell it? How do you know when the valuation is just too high and you're not a big fan of the valuation anymore and you just wanna sell out of it? All these things, guys, you get from putting in the work. And if you're not willing to put in the work, then maybe the stock market is just not for you yet, because you need to understand your strategy. You need to understand, if you're doing individual companies, investing in individual companies, you need to understand those companies, understand what you're looking for in business models, CEOs, industries, all of those things, guys. And you do that by, like I just said, putting in the work, the research work. And if you're not putting in the research work, guys, it's gonna be a long road, and there's a good chance you're not gonna make money. The third thing that you do that shows you're a bad investor is thinking you know everything, guys. Now, this is very important for a lot of reasons. Now, let me start off by saying I'm not the greatest investor. I'm not bad by any means, but in no way am I Warren Buffett or like any famous investor like that. But I would say, considering some people just throw money in the market and they'll throw a dart and think they're the greatest investor ever or anything along those lines, I would say, taking all those things into consideration, I'm above average, okay? But I'm in no way the greatest. And why is that? One of the reasons I think I'm a good investor, we'll say, I'm not great, but above average, I guess. One of those reasons is because I'm always trying to learn. I'm always trying to learn new strategies. I'm always trying to learn new things to look for, all these different things in a company. And by no way am I always right. I think that's a very safe assumption. No one is always right. But some people think they're always right. And some people aren't trying to learn because they know everything. And that's important. If you're not trying to do that, guys, you could be in a bit of trouble. An example here is when I joined Financial Education's private group. Now, if you guys know me, if you've been watching this channel for a while, I say this all the time, I'm just a believer in free information. You can get so much information just by Googling away and teaching yourself or watching YouTube videos or anything like that. But I said to myself, sometimes it's the things you think you know that you really don't know that really hurt you in this world, right? Those can really make a dent in you one way or the other. So I decided, I'm like, look at it as a long-term investment. Worst case scenario, I just waste the money that I put into the group and we'll just be done with it and walk away, right? So I decided to join the group, And I cannot even tell you how much I have learned, more so from the chat itself. Just like, even though I have a full-time job, so sometimes I can't keep up with the chat all day, every day, but even by like just getting out of work and going to read the chat for like an hour or two of what people talked about that day, about the market, about different stocks to look into, I have learned so much. I have learned so many different things that I look into when looking into a company now from that group. I'm just happy to be a part of it, to be perfectly honest with you guys. It's definitely taught me a lot, and I would recommend looking into it at the very least if you have that sort of capital to put into it. But anyway, that's a good example of admitting that you don't know everything. Now, an example of someone who thinks they know everything, let's look at it this way. Let's say they bought Tesla stock somewhere along the line, right? They bought Tesla stock, they made a few $100% on that gain, like yada, 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 yeah, you're great. The problem is, that's the thing. They think they're great. That is the problem. And they can't do anything wrong. They made a few $100% and they're ready to jump out of their full-time job, quit their full-time job, and just go full-time investing. And it's like, do you even have any other stocks you even owned? Like made 100+% gain on? Have you? Like, have you ever read a 10K, or did you just see Financial Education making every other video like 2 or 3 years back about Tesla and you just decided to get in the game? Like, which one was it? So the important thing is to keep yourself in check, always learn, and make sure you don't think you know everything. Me personally, even if I'm talking to someone who I know has no idea about investing, no idea about the stock market, completely clueless, I'm always going to listen to them, guys. And why is that? Because sometimes a blind squirrel finds a nut. Remember that, guys. A blind squirrel sometimes finds a nut. I've had people say things to me that have never said anything intelligent to me in their entire life, and that's not an exaggeration. And then they say one thing, and that just triggers something in my mind. I'm like, he's got a good point. That could lead to this, and this could lead to that, and that leads to over this. It's all of a sudden, you have this incredible thesis that you would have never thought of if you never listened to that idiot. And sometimes, like I just said, a blind squirrel does in fact find a nut. So guys, make sure you aren't one of those people that thinks you know everything, and make sure you're always trying to learn, innovate, and grow, and you're honestly going to be a really successful investor. So the fourth thing that you would do, guys, that really shows you're a bad investor is putting all your eggs in one basket. Now, look at it this way. Say you're a newer investor. Maybe you've watched some of my videos, maybe you watched some of somebody else's videos, maybe you read some books on the stock market, and you decide, all right, the stock market's a great place to grow my wealth. I think it can really help me. So you want to invest in the stock market. First off, awesome. Congratulations. So let's say you have $10,000 you want to invest, all right? That's not part of your rainy day fund. That's nothing to do with money you're gonna need in the short term. You have $10,000 you decide you want to put into the stock market. So instead of maybe putting it into an index fund or maybe researching some companies, you decide to put it into some speculative stock that has some ridiculous bullish theory around it that makes absolutely no sense. Here's the thing, guys. What if you're wrong? What if you're wrong? We just talked about it. No one knows everything. People are wrong all the time. I'm wrong. Financial education's wrong. Everyone's wrong at some point, guys. It's a fact. No one is always right. Nobody's perfect. So what if you're wrong? What if that spec stock has a bad management team that you really don't know much about and they're not making good decisions for the company? What if that speculative stock, that speculative company, they have some really bad lawsuits against them that could really affect that company? You're willing to put that 10 grand, that hard money, that hard-earned money that you worked for, whatever you work for a job, maybe you're a line cook, maybe you're some sort of health expert, maybe you do some manual labor job, that money that you broke your back for, you're willing to put in some speculative company and just see what happens. You're just basically, you might as well buy lottery tickets, just see what happens, guys. Are you willing to do that? The thing is, and the point I'm trying to make, is people only think of the reward. What you want to think of is the risk as well. You got to think things like, well, this CEO is really good, but what happens if, some scandal comes out against him? Can the company still survive? Or maybe like this product shows a lot of promise, but what if this product isn't as much as the company promises and it just, goes under and the public doesn't portray it as well as it actually is supposed to be, right? You got to think about all of these things. And if you put all your eggs in one basket and something goes wrong, you could very well lose the basket. Me personally, I know I said this in a lot of different videos, I only put 30% most of my investing capital in one individual stock. Only 30% at most, and that's if I'm super, super bullish on the company, guys. Super, super bullish. I will never at any point in my life, and never will I ever go all in. Unless, maybe it's like if you're getting started out and you only have like $100 to invest or maybe like a couple $100, then it doesn't make sense to buy like half a share of Facebook or a quarter, less than that, like maybe like a tenth of a share of Facebook, maybe a tenth of a share of Apple. All right, then that's okay. But if you've got like thousands, especially tens of thousands of dollars, guys, it's not worth going all in on one stock unless that's really just the YOLO money you don't care about. But I'm sure most people watching this video, it's not YOLO money at all. It's money. I'm sure most people watching this video could use $10,000 for one thing or another. That's for sure. Now, say you do invest $10,000, right, in that spec stock, and that spec stock has some really bad news, something happens, whatever. The stock goes down 50%, right? So your $10,000 is now $5,000. I know you can do that math, but $10,000 is $5,000. So what does that mean? First off, you just lost 50% of your capital, 50% of that hard-earned money that you invested that was supposed to make you money. Secondly, and more importantly, you only have $5,000 left. So what does that mean? You need a 100% return just to get back to the point you started with. A 100% return to get back to the point you started with, guys. Never put all your eggs in one basket. Make sure you're diversifying enough so that your portfolio can withstand it. All right, guys, so the fifth and final way we're gonna talk about in this video that shows you're a bad investor is by chasing that hot stock. Now, let's say a stock runs 20%, right? They had some news that came out, maybe a company bought them out, whatever the case may be. The bottom line, ABC stock ran 20%. And you are just like, oh my God, that stock's gonna keep going up forever and ever and ever. I gotta get in, I gotta go buy right now, like buy, right? Wrong. There's a lot of danger that can come with that, guys, because what if that stock just sells off? What if you buy at the all-time high? I'm probably not going to buy that stock that runs up 20% in a day because sometimes it might sit there for a while. It might be like a dead money stock kind of once it runs that much, but I'm not going to chase a stock that's up such high of a percentage. I'm just not going to do it. It's not worth it to me because I feel like there's other companies I can get that are undervalued, which I can get in for that 20% run up rather than chasing that 20% run up. You have to ask yourself, once you're getting that FOMO, you're gonna take a step back and say, okay, this company is up 20%. What is the long-term opportunity for this company? And if the answer is, all right, that stock's up 20%, but you can see that stock going up over 100 more percent over the next 5 years or so, all right, that's a little bit different. But if you're making short-term decisions, like we talked about earlier in the video, if you're making short-term decisions because you're getting that FOMO and you see that stock run up 20%, probably not the best idea to get in it. You're probably better off sitting on your hands and waiting for another buying opportunity. Now, let me ask you guys a question. Say, humor me here. Say you're going to visit your aunt in New York City, right? You decide to get on a train. You're taking the train down to New York City at 1 o'clock, right? So you get stuck in traffic on the way to the train station. You know, maybe you got in an accident, whatever. The bottom line is you missed the train. What happens next? Are you gonna go to the customer service desk and start yelling at that poor guy that's working and just say, you need to get that train back here immediately, I need to be on that train, and somehow have him get that train back to the train station? Probably not, guys. That's probably not gonna happen. So what are you gonna do? What are you guys gonna do if you missed that train to go visit your aunt? You're gonna get on the next train, right? You're gonna get on the next train. And it's the same thing with stocks, guys. The same thing with stocks. Same exact thing. There's no need to chase those stocks that are up 20, 30, 40%, unless, like I said, you believe in that company can go up another 100% or whatever. But there's no need to chase them. There's just none. And why is that? Why don't you need to chase those stocks, guys? Why don't you need to get in those hot stocks? Why don't you need to get into Tesla when it's up 400% in the year? Why don't you need to get in NIO when it's up 500% in the year? Why? Why is that? Because there's always gonna be another train, guys. There's always gonna be another train. Always. You can always get on the next one. You can always find that next great buying opportunity. You can always find that next company that's undervalued. You can always research more companies. You can always get in those companies that are undervalued, and you can get on that train, and you're gonna get to where you wanna be eventually, guys. You will absolutely get there. And saying that, guys, that's gonna be it for this video. I hope you guys enjoyed it. Thank you so much for watching. Let me know down in the comments what you think makes someone a bad investor, if you've made any of these mistakes or you do any of these things, and how you're gonna correct them. Like and subscribe as always, and I will see you guys in the next video.